Whoa, no, no. Yeah. Oh, you still trading on a free app? Damn, that's cute. Yeah. Out here flexing on some paper gains like that's loot. You ain't got it. I pull 6 figs before I'm even out of bed. What you got? You're back holding options that are damn near dead. You see me rolling in the Benz, you wonder how. Why you selling your soul for a couple hundred now? I'm stacking chips, flipping options like it's a game. Too easy. You're out here chasing dreams, man, you're lame. I see you panic selling, stressing, praying for a bounce. Desperate. Meanwhile, I just shorted and I'm stacking big amounts. You're refreshing your screen, wiping sweat off your face. Good. I just bought another watch just to fuck with my pace. You're broke, I'm up, we ain't the same. Yeah, you know it. You trade for survival, I trade for the game. What's that? You flexing 100, that's minimum wage. Shit, for real. I just made your whole salary, now back to my trades. Get that money, stack it high, don't play. Yeah, run it. I'll make more in a minute than you make in a day. Flipping stocks while you're stuck in your grind. I'm out here balling, you just falling behind. Watch me rise, you just sit and complain. Watch me, I'm in the fast lane, you're stuck in the rain. I'm cashing in moves while you're out here just waiting. Still waiting, get your money right, or keep on just hating. Oh, you bought some calls, man, that's cute, you're still a rookie. Yeah, you know I'm out here making 6 figs while you acting all looky. You chasing that pump, thinking you're on top. You ain't fooling no way. But I'm shorting your whole portfolio, watch it drop. You tryna flip pennies, but your game is weak. Weak as hell. I make moves that make your whole account look bleak. So sad. You out here acting like you know the game, looking lost, but you're buying at the top, looking lame. Keep watching, I'm breaking records, stacking fast. You're stuck holding bags while I'm living life fast. You buy at the peak, now you crying for a dip. Meanwhile I'm stacking bags while I sip on my 5th. You thought you had a strategy, thought you had a plan, but you just a kid, I'm the grown man. I'm blowing up the market, you're just another clown. While you fighting for crumbs, I'm breaking it down. You're broke, I'm up, we ain't the same. Yeah. You trade for survival, I trade for the game. What's up? You flexing 100, that's minimum wage. For bro, I just made your whole salary, now back to my trades. Get that money, stack it high, don't play. Yeah, run it. I'll make more in a minute than you make in a day. Flipping stocks while you're stuck in your grind. I'm out here balling, you just falling behind. Watch me rise, you just sit and complain. Watch me, I'm in the fast lane, you're stuck in the rain. I'm cashing in moves while you're out here just waiting. Still waiting, get your money right, or keep on just hating.
Oh, brother, oh, brother, oh, brother. Good morning, good morning, good morning. It is a beautiful Thursday, March the 27th, and we are here with the Matt Kohrs makeup tutorial as we normally are, but today we're going to switch it up a little bit if you guys don't mind. I know every single day you come in here and you're like, Matt, what should I wear to work today? How should I put on my mascara? What is the right lipstick for me? What is my morning routine? How many times do I put my face into cold water to get ready for a hard day of grinding? And that's what we normally do. But today we're going to switch it up a little bit. And I know it's going to be a foreign subject to many of you, but we're actually going to talk about the stock market, the economy, and the tariff war, because it might be impacting how many times we can put our face into a bowl of water, how many bananas we can consume, and how just hardcore we grind. So I know it's going to be a little different, but if you guys would afford me this one opportunity to talk about monetary policy, the economy, the political interaction of all of that, and what it means for the overall stock market. You guys have probably heard of stocks, you've probably heard of investing, but we're going to get a little funky here today, and we're going to talk about options, we're going to talk about futures, we're going to talk about degenerately gambling in what I would refer to as the world's largest casino. So I hope that sounds cool to all of you. I know it's a little bit of a switch up, but it's, what's life? Is sometimes you just got to do things to be on your toes and get ready for the big day ahead. So I hope you guys are having a fantastic day. Shout out to all of you who joined up with the specialty stream last night where we kind of awkwardly waited around from market close all the way up till 5:30, and we got kind of a nothing burger related to Trump and the tariffs, but basically the TLDR there, and I do have more info on it. But if you just need to know the overarching headline here, autos not made in the United States will be tariffed at 25%. So basically Trump biggest announcement, and this will be signed. He signed it. It goes into effect on April 2nd, and then the tariffs will start being collected on April 3rd is basically the timeline. This is all the update we got right after the market closed yesterday. And basically it's just saying, hey, if you're building vehicles within the U.S., you're good to go. If you are not, you're going to get tariffed and pretty heavily tariffed. So, and on top of that, remember, reciprocal tariffs coming down the pike on April 2nd. Remember, we had the JP Morgan position expiring at the end of the month. That's going to be March 31st, obviously. So we have that to consider. We got some GDP and initial jobless claims out today. I'll be going over that. Tomorrow morning, we have the inflation report, the PCE, the personal consumption expenditure. So there's a lot of things to be paying attention to in the next couple trading days. But I think what you guys are probably most interested in is the fact that the overall market for the past couple weeks has been clearly bearish. Not only bearish in terms of trend, lower highs and lower lows, but also in the underlying derivatives market, which is very much influencing the market right now. I'm talking about options, just put dominated. Day over day, week over week, and the entire chain, whatever portion of time we looked at, the option chain was dominated by puts. The open interest, it's visible, it's there for everyone. There's many tools that you can use to track it. And if you're using a tool that is properly reflecting data, you'd realize that the smallest and the largest time frames were all dominated by puts. Now, that changed a little bit over the past week. Basically, heading into really last Friday, which was not only the monthly expiration, but since it was the end of the fiscal quarter, it was also a quad witching day. Heading into that, it was still put dominated, but day over day, it was getting less put dominated. And then the same thing happened going into the weekend, the gap up on Monday. It was still overall put dominated, but the bears, the puts were kind of losing their power. In the shortest of time frames, it was actually starting to get a little bit call dominated. That all changed back to fully bearish yesterday. So I'll show you all the numbers, the stats, facts, and figures. But for those of you who are now like just caring about the short-term trades, right now we are fully back. The way the bulls and the calls were kind of like they were catching up and getting closer and closer to parity on the biggest time frames. It's now going the other way. So we haven't had a technical breakdown yet, and I think that would kind of be the dagger in the heart. So I'll be going over that. But right now, I just want to let you know that the option chain is once again, even in the shortest of time frames, now it is back to being put dominated after yesterday's action. And then this is setting up for kind of like a last stand situation. There's kind of an Alamo line, if you will. So I'll be showing you that on the chart because not only if we break that down, or if price does break below it, not only is it a true technical breakdown, but on top of that, it's going to make the option chain even more put dominated, which obviously would be quite a bit of downward pressure, at least in the short term. So I want to talk about that. I want to get everyone ready for the inflation report tomorrow. I'll go over the news from today. We'll talk about the JP Morgan position for March 31st. We'll talk about the April 2nd reciprocal tariff announcement. And then we also have some individual equity news specifically related to both Tesla and NVIDIA. NVIDIA looking uniquely weak, and we have a specialty story to go over on that. So that's pretty much the plan. We're going to prep everything up. We're going to get ready for the day. Right now, I'll give you my bull case, my bear case. My current bias is bearish, and yes, I am swinging puts. Everyone who watched the stream yesterday knows that I've been swinging puts into today. I got out of my calls yesterday morning, locked in a huge amount of money, at least to me, switched it to puts. Those are currently riding, and we're going to see what today brings. Of course, we have our futures trades. We're going to get into that as well. Shout out to Apex. They are a partner of today's show. You can get 80% off right now on Apex. It is dirt cheap to take one of those tests. If you want to trade with someone else's money, I have a little bit of a spiel on that in a second. So that's pretty much it. That's the breakdown of what the hell is going on this beautiful, beautiful, beautiful Thursday. And I hope you guys are having a good one. I hope you made a shitload of money yesterday. I hope you're about to make 2x shitload money today. And I hope let's have a good one. Let's have some good vibes. Don't forget to get your coffee. We're ripping a little bit of espresso this morning. And by a little bit, I mean a lot of it. Dude, one of these days when I finally croak, the doctors are going to crack me open. And just for science, they need to look at what's going on this ticker, because this heart, beyond the stress and the high blood pressure of trading, the fact that I ramp it up with dude, I have enough caffeine to actually kill a horse per day. Dude, I should dedicate my heart organ to science just for pure study. pure study. But anyway, that is beside the point. Let's get rocking. Stock futures are little change as investors weigh Trump's auto tariff. So a little sneak peek at what's going on. We are slightly below yesterday's close. You can see pretty much from market close till now, we really haven't done much. Last night, when I was celebrating Taco Wednesday, market was going down. I was like, dude, this might actually wake up to a legit gap down. Then it kind of came back until around 6 a.m. And since then, we've drifted. We are just below yesterday's closing value. So not really the most movement. And actually, for my position, like I said, I am swinging puts into today. This is the ideal situation. I didn't want a massive gap down because when you get a massive gap down, there's such high odds of getting that upside gap fill. So I actually kind of prefer we open right here, not much post or pre-market trading, and then in the actual trading session, I just want to see us start to legit break down. So that's what I would like to happen. Now, what I would like to happen and what's going to happen, we're going to see if that is agreeing at all. We got a little bit of action this morning at 8:30 when we got the GDP and the initial jobless claims report. As you can see, they were expecting 2.3%, came in at 2.4 for initial jobless claims. It came in pretty much at expectation. Didn't really move the market. There was a little slight pop up at 8:30, but the market pretty much took it in stride. I would say the main thing for you guys to focus on in terms of major macroeconomic events is tomorrow with the PCE report at 8:30, an hour before the market opens. The personal consumption expenditure. This is very similar to the CPI report. That's probably the one that you hear of the most. But according to the Fed, according to Daddy Pal, this is the one that they weigh the most when making their monetary policy decisions. So you're going to want to watch that at 8:30. And also, that is a perfect time to do the 50-50 strategy if you're looking to pass the Apex test. When I made a whole video on the 50-50 strategy, but it basically goes like this. You buy 2 test accounts right before the announcement. You punt one long max contract, you punt the other short max long contracts, and there's a pretty high chance that at least one of those is going to pass. Is it a guarantee? No, sometimes there's data issues. Sometimes the market doesn't move much. Sometimes it moves and then goes the other way and they both get blown out and then it moves. So there are some obvious caveats to it, but in general, that's actually what I do to easily pass because you're not allowed to do that with PA accounts. If they catch you doing that with performance accounts, they're not going to pay you out. You're going to blow those out. It's not going to work. But in terms of simply passing an eval, that's a strategy you could easily use there. Is it the smartest thing to do? Well, it's not really financially efficient. It's definitely time efficient. But on the highest level, it's really more important that you do that if you already have a comfortable trading strategy. If you're just doing that to get a PA account and you're like, okay, now how should I trade? Well, you're going to just blow those out and waste any more money. So the 50-50 strategy where half your accounts go long, half your accounts go short, max contracts, set up the orders beforehand so you know exactly what profit you need. Just do some back of the napkin math. That works for people who are basically trying to very quickly pass the eval just because they just want a PA account because they already know how they're going to trade the PA. So just want to call that out that all of this week, that's probably the best opportunity to do it. The big news yesterday came after the market closed. Trump's auto tariffs and threats on allies intensifies the trade war. Trump plans to impose 25% tariff on imported vehicles. President leaves little room for exempting Canada or Mexico. So it's just this. If the car is imported, it's going to be tariffed. If it's created in the U.S., it's not going to be tariffed. Obviously, this drives a very large incentive for vehicle creation within the U.S. If you look right now, what's going on, pretty much every major automaker's ticker is down. Every stock is down except for Tesla, which is actually slightly up, but also we're still in pre-market trading. So let's see how this really plays out. Trump announces 25% tariffs on all cars not made in the U.S. President Donald Trump yesterday, Wednesday, said he would impose 25% tariffs on all cars that are not made in the U.S. And Trump said there is absolutely no tariff for cars that are built in the U.S. So that's the TLDR, kind of a nothing burger. The weird thing about it was announced yesterday. It was signed yesterday. It goes into effect on April 2nd with all the other reciprocal tariff. And I want to clarify, this is additive. This is not going to be replaced by the reciprocal tariff. So whatever's going on, it will be a cumulative effect. And then they're going to start collecting these tariffs on the 3rd. like I said, the market really didn't move much from this. One conspiracy theory that I'm hearing is the reason for this impromptu announcement was to kind of bring the media cycle away from the whole Signal group chat thing with Walls and Hegseth and that journalist from The Atlantic. So that's one assumption. Maybe it's a real conspiracy theory. Maybe it's not. But like I said, if you guys watched it yesterday, we were pretty much at the point of just watching me die on old school RuneScape instead of like actually caring about the news because just nothing was happening. Trump threatens quote unquote far larger tariffs if the EU and Canada unite to do economic harm to the US. So back on the Wall Street Journal article when they said trade war intensifying and we're threatening our allies, it's pretty much this. Trump saying, hey, if we see the old buddy system between two other countries that are not us, not the old red, white, and blue, there's going to be a problemo, mi amigo. And that's what he's kind of seeing the EU and Canada, if they unite together to do economic harm, he's going to clap back. Donald Trump has threatened to impose quote unquote far larger tariffs on the EU and Canada if they work together to combat trade tariffs. If the EU works with Canada in order to do economic harm to the USA, large-scale tariffs far larger than currently planned, will be placed on them both in order to protect the best friend that each of those two countries have ever had. So he posted that on social media today. So that's kind of some of the breaking news of this morning. We could come back to it. Actually, I could just show you it right now. I highly recommend you turn on your notifications for Trump on True Social if you're actively trading in the market, because he commonly is just, I guess, putting out truths there that does have a large impact on the market. So just as an active trader, as a person who might be interested in the market, highly recommend turning your notifications on for this guy, because I find that it's like one of the fastest ways to get breaking information that obviously might have an impact on your personal position. Right now with the auto tariffs and just recently with Elon and Social Security and Doge, Tesla, for good reason, is in a big spotlight, like the stock, because from its peak, it was down 50%. Year to date, at one point, it was down 35%. Recently getting a bounce, and now people are saying, oh, is the bounce going to fail? Trump says Tesla CEO Elon Musk didn't advise on auto tariffs because he may have a conflict. So this was one of the questions from last night. And then from there, Trump kind of actually expounded upon it, and he basically said, actually, Elon's never asked me for anything related to business, and I'm kind of surprised that he hasn't asked me anything for business. So right now, from these announcements, Tesla is slightly green, but obviously yesterday was still a pretty brutal day, so time will tell to see which way it does or doesn't go. I do want to clarify, I rode those calls all the way up, made a huge chunk of change, lock those calls in, and now I'm actually currently riding puts back down. Remember, when we do these call outs, I'm a very, very active trader. So one day I'll go from bullish to bearish to bullish, just like that. So a lot of the times I think, especially on social media, there's this weird thing with active traders, and then social media is conflating that as if you're an investor. So they're finding a video you made a week, a month, a year ago, and you could be bullish or bearish on something at that time. And they're like, look, I found this video, and oh my God, you're like horribly wrong. It's like, dude, I've switched my positions 8 times since then. So I just want to clarify, recently, I posted the video about Tesla, and I said, hey, things are looking really good. I'm punting my portfolio long. I made a shitload of money. I closed it out, and I actually am now going the other way. So please don't conflate like a long-term fundamental investment discussion also with active trading. I know it's really easy to, because trading and investing happen in the same thing, the stock market, the options market, the futures market, the crypto market, but they are wildly different, wildly different. When I'm investing, I'm prepared to be in something for 5, 10, 15, 20, 30 years. I look at the fundamentals, and I really don't care about the current price or what's going on, because that's too short term. But when I actively trade, I don't care about fundamentals. I care about exactly what's going on with price action and options. So I think I completely understand why it's easy to conflate those two. And in the long term, I'm still a bullish Tesla investor, but yet in the short term, I actually have active plays that are going to benefit if it starts to drop. And that's just because I'm reading price action, I'm reading options. So I see those comments a lot. So I just wanted to quickly say something, because it is very easy to be like, oh, well, he had this video and that video. And I get it all the time, whether it's Tesla or the overall market. They're like, dude, you were just bullish. Dude, you were just bearish. Yeah, that's called what fucking trading is. Like, welcome to the game. So just wanted to call that out and I guess further explain it. Tesla shares drop on plunging European sales, concerns about Trump's tariffs. The tariff announcement, kind of is actually going to benefit Tesla. I'm not saying all aspects of all of Tesla's are made in the US, but a good chunk of it is, and they have some big plants here. So maybe they're just going to end up putting a larger emphasis on it. But the thing that's currently negative for Tesla is the drop in European sales and just plunging sales in general. So in the short term, that's going to be a bit problematic. Obviously, something worthwhile to pay attention to. Now, remember, this newsletter is 100% free, mattkohrs.locals.com. It's in the description of the video. My mods will put it in chat right now. I break down the previous week, what to look forward to in the upcoming week, all the major macroeconomic events. I do want to let you know that at 10 a.m. today, pending home sales, just for those of you who might care about it. And then at 4:30 today, we're going to be hearing from the Richmond Fed president. Tomorrow, the big thing is going to be the PCE report, the personal consumption expenditure. So this is basically just a little cheat sheet of all the earnings, all the major macroeconomic events, and then also the seasonality of each individual day. Speaking of seasonality, this is a look at the hypothetical equity curve you would have if you bought it open, sold at close on the S&P 500 futures market on this exact day, once basically this hypothetical one trade a year. You could see it was a little bullish, mainly neutral, then a bit bearish, recently more bullish. It's kind of interesting because the profit factor does favor the bulls, but the bears actually win more often. That's why the bias is leaning bullish. When I see things that are kind of indecisive like this, it basically just tells me don't take that into account for my trades today. I do take note when it's very bullish historically or very bearish historically, but this is slightly favoring the bulls. And I do want to let you know just for tomorrow, the seasonality does favor the bears. The bears win more often and they win with greater size. So just wanted to show you a little sneak peek at what's coming down the pike. Now, remember, that's 100% free, but there's also a trading Discord that you can get into for free for the first month. Just use that promo code GONI. It's all connected via Locals. So on Locals, you get the free newsletter. But on top of it, you could go from a member to a supporter. You could become a supporter for free for the first month using that promo code GONI. And that's exactly how you get access to the Discord. That's exactly how you get access to the Piper signal. Yesterday, Piper fired off at 11:20, 4 to 5 confidence bearish, or recommending a SPY call credit spread, betting that the market would end the day below 577 and 494. And the minimum unit size for this trade was 382. Obviously, you could scale that up to your heart's desire, and it returned 100% of the premium, $18. Obviously, this is the minimum size, and like I said, you could scale it up. So if you want to see Piper in real time, that's in the Discord. On top of that, you don't just get Piper, you also get my own trades. So you could see year to date, I'm currently up $193,000. Ask anyone in the Discord. These are all called out in real time, not when the trade's over. When I get into the trade, there's an alert. When I get out of the trade, there's an alert. And then throughout the day, I also give explanation if there's any questions about what I'm doing. You can see that I didn't have the best January. It was kind of a little up, a little down, and really even the first portion, the first week or two of February was kind of nothing. But really, with the spike in volatility, my account has taken off. You could see from Feb 7th up until now, just absolutely ripping. So once again, if you guys want these things in real time, that's what the Discord is for. And you get to test it out for a month. It's a free test drive. The first month is free. Use that code GOONY on Locals to go from a member to a supporter. And then when you do that, you'll be able to come to a page such as this. And you could get into the Discord with the giant Discord button right there, or you could come to the second pinned message and there's the link for the Discord, and then just follow the process of how to link your Discord account and your Locals account, and you'll be a-okay. If you have any issues, don't hesitate to reach out to me. Media@MatthewKohrs.com. You could shoot me an email, or you could DM me on Discord, MMK147. Now, with that being said, what's going on with the market? Slightly red, slightly red. The Qs are hanging out at the low from yesterday. Tesla's taken, it's slightly green by 44 cents, so it's pretty much neutral. Nvidia is getting hit. I think Nvidia is under like serious problems, and I'm going to be let's just cover that now before I do the market breakdown. This is a very, very interesting thing. So James Chanos, Jim, as they call him, he is, as a trader, he's just like one of the best to ever do it. So whenever he does or says anything, I think it is like worthwhile to kind of like pay attention to. Now, some people don't like him because he's well known to short things, but once again, he makes a lot of money. Like, his call outs are pretty good call outs. Is he a perfect trader? No, but I just thought this was interesting, so I wanted to share this with you. Yesterday, it was announced that Nvidia is in advanced talks to buy Lepton, Lepton AI, a 2-year-old startup that rents out servers powered by Nvidia's AI chips, in a deal with several $100 million, according to a person close to the company. So with this, that might just sound like, okay, a big conglomerate is just like gobbling up a company and it's going to use whatever, its IP. But Chanos has kind of an interesting breakdown of the situation. Don't know if this deal happens, and it's not particularly big, but trying to buy out your resellers is usually a huge red flag. It's often a way to bury investor costs and or avoid receivable provisionings. So this is clearly more of a fundamental breakdown of like, okay, what is this corporate move? And is NVIDIA going around gobbling up people that they, once again, can just kind of not really hide information, but if it's all internal because it's not another company, they can kind of gloss over certain things. So I just thought that was interesting because, I mean, right now, semiconductors are taking a legitimate hit. If you look at SMH, this is the semiconductor ETF. You can see that this is under serious pressure. Lower highs, lower lows. We know recently there's just been some problems, and this was the entire industry, the field that kept the whole market alive. I mean, it was this AI fervor, data centers, crypto, and everyone knew that this was the tech that was all being built out on. So SMH, the semiconductors, the processing chips, I'm talking about NVIDIA, AMD, Micron, Intel, Qualcomm, ASML, Taiwan Semiconductor, like all of those, that whole thing, they were just ripping from November of 23 all the way up to July of 24. It was a nonstop party. And then recently took a hit, was ever not really able to recover, even though the market hit a new all-time high. Semiconductors didn't. So if anything, we now have lower highs. And then the question is, are we going to make lower lows? Obviously, we took out this big support, but watch it. This is going to be a big deal if there's legit weakness in that world. So I don't mean to be like sounding the alarms now. I'm just saying, hey, potential red flag, something worthwhile to pay attention to, especially if this makes up a large part of your overall investment portfolio. You might want to do a little bit of repositioning. So just wanted to call that out. Thought it was something that was interesting. What I think is really interesting, bringing it to today specifically, is we are in an Alamo-esque situation. So after vomiting from the new all-time high in mid-Feb, lower highs and lower lows, just puke, 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 we're every other day, red, green, red, green, red, green, red, green, red, like just back and forth. Look at it. We just so commonly are going back and forth. We were able to, between Monday and Tuesday, by a miracle, put in 2 green days, which I didn't even know was legal. But now we're getting to the point that, is this just going to be a classic bear flag breakdown? So this is a well-known technical setup that many of you traded before. It's not my favorite. It works roughly 60% of the time if you actually crunch the numbers on it. But regardless, the fact that so many people are paying attention to it means that we should probably be paying attention to it. So anyway, if you don't know what I'm talking about, it's just the fact that this is the flag pole and this is the flag, and they commonly break that way. That's what people are talking about when they say this bear flag. So there's the flag pole, there's the flag. They commonly break the opposite way. So basically, you get the overall movement, and then you get a little bit of a reversion, maybe referred to as a dead cat bounce, and then it breaks. So it could be your classic A, B, C, D pattern. There's a lot of different technical names for basically the same setup, but what you just need to know is the fact that we're just not bouncing that high shows you there's not that much bullishness, and we're coming up to an interesting test. So will we pass the test? Will we fail the test? I mean, if I definitively knew the answer to that, I wouldn't be doing this show. I'd be a rich billionaire on some sort of beach. But anyway, what you need to know is recently, kind of starting around mid-March, we have these higher highs and these higher lows, a little bit of a reversion, a little bit of a breather, a little bit of a relief from the overall movement that we've recently had. But today we are setting up for potentially a massive test. So right here, not only do we have the downside gap fill at 564.89, which is the high from Friday, March the 21st, we also have this upsloping trend line that represents the bear flag. So if that snaps, and then when you bring it to all these key levels, you realize that these all align at really important parts. So as of right now, let me just update this so I can see roughly where we're coming in at, roughly 5707. So my cursor is about where we're going to open. So we're opening slightly below yesterday's close. This is the transition zone up here between 5750 and 5730. This is the transition where above it, the bulls have a shot. Below it, the bears are in control. So bullish dominance, bearish dominance in the shortest of terms. We are opening up in the bear territory. We are on those enemy lines. We're behind the line. This is where the battle is. And right now, the bears are in control, especially if you saw yesterday. We know the options market has gone from, in the shortest of terms, being call dominated to now being put dominated. And we're kind of looking at this region. So this is the transitional zone. And I would say this is going to be the first big test of the day between 5,700, where we bounced yesterday, and also a huge open interest level at 5,690. This is going to be your first real bearish test. But then the breakdown, that big daily trend line that I was telling you about, is closer to here. So we know there's huge open interest at 5,675, which, surprise, surprise, also happens to be right around this gap fill from Friday, where we kind of closed out and then we had this giant gap up. And it's also roughly where that trend line is. So yes, the main bear test number one is right here. If that doesn't hold, I cannot stress the importance enough of this 5-point region. It is an open interest level. It is a gap fill. It's also a massive trend line. This will be it. If it doesn't hold, quick puke to 5,650. So basically, bearish target number one, huge bearish target number two, bearish target number three. Now on the flip side, if we push up and kind of hold above the close and go green, I would basically just be looking for the market to trend up into the transitional zone. If we break out, there's a target right above it according to the open interest levels, but I'd be looking for maybe us to stall out. So that's obviously, this is more of my bull case. This is more of my bear case. But like, before the market opens, I just need to call this out. This is a massive, massive, massive level down here. So please, please, I beg of you to pay attention to it. And on that note, dingity ding ding ding, the world's largest casino is now open. Best of luck to all. Play responsibly, and if not, have fun. You can't take it with you when you go. All right. Well, you guys know me. I'm attempting to be a reformed degenerate trader and become now a degenerate disciplined trader. So I'm going to wait for the market to open. I want to see the flow of what is happening, what isn't happening. I should note that Captain Condor is not playing today, but it does appear as if there's a large call credit spread betting that the market today will close below 5,740, which just happens to be kind of in this transition zone. So they're saying, yeah, we're not going above that today. So that appears to be in play. Of course, we're going to be watching the options flow throughout the day. Coming into today, I did have puts. My current bias is bearish. Yes, my bias is colored by the fact that I have puts, but I also think I'm legitimately just on the right side of this. The 5-minute, the 10-minute, the 30-minute, and the 4-hour are all now below their EMA, so price momentum is bearish. And if you look at the NASDAQ, the 5-minute, the 10-minute, the 30-minute, the 4-hour right now is once again favoring the bears. So according to price momentum, according to the option structure, in the shortest of time frames, as of right now, like if we just do a freeze frame type of a situation, I don't see a piece of information telling you that it's worthwhile to be bullish right now. Now, I'm not talking about investing. If you're saying, wait, can I buy the dip for my long-term account? Yeah, I don't care. Go for it. I'm talking about short-term trading. I'm like, what's going on today? What's potentially going on tomorrow? In the shortest term, today, tomorrow, how are we heading into the weekend? The bears are in the driver's seat. I just want to be very, very clear. The bears are currently in the driver's seat. So if you're just out there saying, oh, should I like randomly be buying shit? No, because you're just not trying. Do what the big money's doing. You want to be on the right side of big money movement. And as of right now, it's just not happening. Now, of course, at some point today, it could switch because maybe big money decides to get rid of their puts and start buying calls. Of course, that is theoretically possible. But like I said, if we just do a freeze frame situation at this exact moment in time, the bears are in the driver's seat. So I just don't see the data worthwhile to be bullish. The overall situation, price momentum, price structure, and options flow, they are not constructive for the bulls. In fact, it's actually getting more constructive for the bears. So I want to be very, very, very clear about that. Before the market gets going too crazy today, shout out to Rumble Premium. Remember, you can escape the ads. You can get access to specialty content. You can directly support the company that is fighting for free speech by using that code RUMBLE LIVE. RUMBLELIVE will get you $20 off the annual subscription. So shout out to Rumble Premium. Of course, very happy to be partnered up with them. Everyone on Rumble right now, if you want to bring your viewing experience to the next level, get access to premium content, and also just directly support the company that is fighting for your rights to free speech, check it out, Rumble Premium. Use that code RUMBLELIVE, RUMBLELIVE, to get $20 off the annual plan. coming back to the market. We're getting a little bit hit here. Here's a look at the options flow thus far on the S&P 500 in real time. Just got a little bit smacked. Looking at the Mag 7. Mag 7 actually showing strength for the first 2 minutes, trending down a little bit right now. We're going to come back to this because it does look as if we have a little bit of a switcheroo. The SPY is showing some weakness, while the Mag 7, as of now, maybe a little bit of potential strength, but let's just see, is it about to roll over? We just need more time. We need more data. There's no sense in rushing out of the gates. Oh, I should switch this over just so I can show you guys. I have not traded today. Here's all my accounts right here. No trades executed. I'm ideally just waiting for my perfect opportunity. As of now, this is day 4 of the accounts. I don't know what it is, but you can see right here, I'm up about $4,000 per account. So the next part, remember, I'm doing this thing where I'm trading a bit more aggressively right now just to try to get that buffer, because I find that the success when trading these SIMDA funded companies comes from, do you have a reasonable amount of buffer to actually trade your strategy? Because when you start out, you only have a 2.5K buffer, at least on these 50K accounts, which is not much of a buffer, folks. That's a 5% buffer. Some of the best trading systems, all the best trading systems, all the best traders still can suffer a 5% drawdown. So really, my goal is to get these accounts up to 60K, because then I have a $10,000 buffer, which is actually obviously a 20% drawdown. And then from there, I just find that you can just work with that a little bit more. You have a little bit more room for error, which is just going to be natural in the variance of active trading. So my goal is, well, my first goal was to get to the 2.5 because that is the buffer. My next goal is to get up to 55K because that's where your risk can go from, what was it, like 30% to 50%, and then from 55,000, 5K profit. My next goal is then, my ultimate goal is to build out that buffer. So I'm aggressively trading right now, taking on a little bit more risk than I normally would, just to see if I could catch a little bit of a lucky streak to get that 10K of buffer, and then I can return to my quote unquote normal trading strategy. So that's the goal, but I just want to show you this. These accounts have been alive for, I think, 4-ish days. Maybe today's 4. I'd have to double check that. I think it's day 4. Monday, Tuesday, Wednesday, Thursday, whatever. It's about 4K in profit. So I just want to show you that. I'll be actively trading on it. And then, of course, everyone in the Discord knows. Once again, if you're wondering, should you get into the Discord? Should you not? Well, these were all the calls, all the trades called out in real time yesterday. Up 83%, up 74%, up 63%, up 10%. So 17, 27, 37, 42. 43K. I'm up about $43,000. The account for the first time this year is now above $300,000. Year to date, up about 212. Year to date, a 234% return, all called out in real time. Ask anyone in the Discord. They were all called out in real time. These were all called out yesterday. Not only did I lock in my calls, I kicked it over to puts, and they're just clearly already fucking crushing it. So stoked about that. More than happy to share what I know, give you the Piper signal. There's a bunch of educational videos in there, but I think really the main advantage is having a community of like-minded people where we're always just bouncing ideas off of each other. I think sometimes you just have to have like a little bit of a sanity check of if what you're doing is the smart thing, if it's the dumb thing, something like that. So once again, I'm not trying to trick anyone. I don't want anyone to feel like they got. Your first month is free. Check it out for an entire month. And I think even within that free month, you'll be able to find enough value to justify it for the next year or two. I mean, the one trade I had on Monday would have paid for the next 100 years of you being in the Discord. And that was just from one trade. So, well, I don't know. That's what it is. Check it out. If it's for you, if it's not for you, I understand. I'm not everyone's cup of tea, but I will be patiently waiting to see what happens. Here are the key levels. We already snapped that. Jesus Christ, dude. All right, we are coming up. When I started the show, remember I said there's a little bit of an Alamo situation? Well, that's this line right here, which is getting awfully close. So this is the line where if we snap it, shit could get a little bit crazy. It's right around 5,670, which also happens to be basically this downside gap fill. I'm telling you this right now. This is going to be the big test of the day. Do I expect it to break on attempt 1? Maybe. It's pretty early in the day, but like I cannot, like, how many arrows do I need to put here to tell you guys that this is like fucking massively important? If this snaps, easy flush play to 5,650. easy flush play. But also we could bounce out. So this might be a great reversion trade. But I'm just telling you, this is a key technical level. It is a key options level. We have that giant structure. Like there's so much going on right here. This is the area to watch. I have no special prediction on if we break or bounce. I don't. And I think the people who try to have predictions on that type of a thing, those are the people who are not net profitable traders. If you are coming in right here saying, yes, I am absurdly confident we bounce, or yes, I'm absurdly confident we break down, you're going to be right half the time. You're going to be wrong half the time. What you want to do is just wait. Just have the patience to wait and let the market tell you, oh, okay, we overshoot it, we base and we bounce. Okay, cool. Risk the recent low and try to catch it. On the other side, if we try to bounce and it fails and it's just a lower high and we keep pushing on, great. You could go short and risk whatever the recent high is. You're trying to play this either the bounce or the break with the lowest risk possible. If you're wrong, you take a paper cut. If you're right, you get to ride the next big trend, whether a bounce, whether a break. This idea of active trading, of people trying to predict, you're wasting your time. Don't try to predict, just react. React to price structure. Are we making lower highs and lower lows, or are we making higher highs or higher lows? What is price telling you? Then what is price momentum telling you? We're below all the EMAs on the 5 minute, the 10 minute, the 30 minute, the 4 hour. We're below it on the NASDAQ, 5 minute, 10 minute, 30 minute, 4 hour. So price structure, as of now, we have lower highs, lower lows. That favors the bears. Price momentum, below all 8 of the time frame EMAs. That is bearish. The final thing to check is the options flow. If those 3 things are telling you the same thing, price structure, price momentum, and options flow, you know what side of the trade to be on, and you definitely know, at least at minimum, not to be on the other side of the trade. If you see lower highs on lower lows for whatever time frame you care about going, and you see bearish price momentum and options flows dropping, why the fuck would you have on a bullish position? Like, why in the world would you ever put on a bullish position if every fucking important thing is going against you? I think the success of being a good trader has a lot to do with just not doing the dumb thing. Like, I think that there's this like misconception that you have to have like solved this like mathematical puzzle of how the world interacts with the markets and crowd psychology and like all this like very, very fancy stuff. And I think, in my own opinion, that's just like a lot of people trying to hype up what it is, when in reality, the successful traders are people who just like can stop themselves from doing the dumb fucking thing. Don't bend over backwards trying to do the like amazingly intelligent, genius level thing. Just get yourself to not do the dumb fucking things. I'm telling you, I promise you this. Anyone who's been in these trenches for years knows that the people who are consistently profitable on any level are the people who just don't do dumb fucking shit. Just not doing the dumb things. I guess I'm out. Well, see, it's actually a lot easier said than done, just because of how much like seeing money going up or down, it just like legitimately fucks with your psychology a lot. So I know that sounds easy. You're like, yeah, I just like won't do that. I won't go on tilt. And then all of a sudden we all get in that position and you just feel like it's a borderline out of body experience. And you're like, what the fuck am I doing? And like, we've been there. I've been there. You guys have seen, I've streamed me being on tilt. And like, sometimes you just can't get yourself to do the things that you know you should be doing. All right, we're right in the test zone. This is going to be very, very important. Let's go to the 15 second. It's actually crazy. Trading is one of those absurdly frustrating things where you can know exactly what to do, but for some reason, sometimes you just can't bring yourself to do it. You just can't bring yourself to do it. It is fascinating. It is frustrating. And I think that's kind of what makes it so addictive, is you want to come back and improve and see if you can master your own mind. Because if you do, you know you can make a shitload of money. So like that's the thing. And it's pitched as this kind of, or it's not really it is pitched, but even if it's not being like sold to you of like be a trader, even just when you do it for a little bit, you're like, oh, okay, that's basic. I get it. Price structure, price momentum, options flow. Cool, not complicated. And then you get in the trenches and you're like, you feel like a fucking crazy person. You're like, I know exactly what to do. Why am I not doing that? Or even worse, why am I doing the opposite of what I know what to do? And that's, I suppose, the battle with trading, is we all just feel fucking nutty. Like, it just makes you feel like you're actually losing your mind. It's crazy. But that's why we're doing it together. That is why we are doing it together. Speaking of together, how's my shit looking? 20K, 10K, 18K, and break even. I am almost break even on Tesla. Tesla's popping. Do I just want to cut that? I might get out of Tesla before. Once again, I'm just trying to do the smart thing. I'm barely up right now. I'm going to give it a second, but I see Tesla has some strength. Dude, fuck this. Why would I risk any money? Basically break even right now. I'm in at 805. What's it going to get me out at? Can I get out at 805? Is Tesla pushing still? Tesla showing strength when the rest of the world is showing a little bit of weakness. Let's see if I could get out at 8. Pretty much a scratch trade. Yeah. Sometimes you go fishing and you don't catch a fish. Like, shit happens, dude. Shit happens. I actually didn't get the fill on that. Come on, give me the fill. Yeah, there. Okay, I dumped it. Sometimes you just don't get it. Right there. It went up. It came back down. I didn't want to risk any money. I think it's weird that the market is puking and yet Tesla is showing strength. I was clearly just, it didn't break my way. You're not going to be right every trade. I think one of the biggest issues retail traders have, which is setting the difference between retail and professional, it's all based on risk management. Professional traders, day in and day out, they just always ask themselves, what happens if I'm wrong? And on the retail side, whenever you put money on the table, you want it to, of course you want every trade to make you money, but the math of the market tells us that it's going to be around 50-50. You're going to be right about half the time and you're going to be wrong about half the time. That's one of the plays. I had money. It went up. I was roughly break even. I didn't want to let it go red. So I got in. It was nothing. It was a scratch trade. That's perfectly fine. And that's like, if you're always just watching it. And when I say it, I'm like referring, like really, really paying attention to risk. Okay. It didn't break my way. It just simply didn't break my way, and shit like that happens. Actually, I should update this. Tesla. So it just didn't break my way, and that's okay. Maybe that's one of the things that's like uniquely difficult about trading is there's not many professions in this world where you're so commonly saying you're wrong. And like that is trading. I'm not necessarily talking about investing. With investing, it is easier to increase your accuracy, how often you're right, just because you have more time for basic fundamentals to play out. But with trading, especially in the short-term stuff, there's a lot of just random movement. There's a lot of noise. There's a lot of random ass signals. It is pretty much normally distributed in the shortest of time frames. The next bar, the next 15-second bar, the next minute bar, the next 5-minute bar. In any short time frame, you pretty much have a 50-50 shot of it either going your way or not going your way. It's just, once again, it's just it's just a perfect 50-50 Gaussian distribution, and that's how shit plays out. It just is how it is. So with that, you just have to be focused on the longer term picture of just trying to not do the dumb shit. So Tesla, knowing my luck, that'll be the high of the day, and it pukes, and if I held those puts, it would pay a lot. But even if there's like a 1 or a 5% chance that it gets going and really goes against me, well, why would I risk going down? I was able, the market gave me the opportunity. Yes, I went up a little bit. Of course, I wish I locked in a bit of that money. I was up, I don't know, somewhere between maybe $3,000, $5,000, $8,000. And that's a bummer. Of course, that's good money. But what I care about more than that profit is just don't let it actually work against you. Whenever you go up a decent amount of money, it's just like, why take that risk of it actually like slamming back in your face? So that was the cut right there. I got out just because like it was starting to go against me. Like, fuck it. There's always going to be another opportunity. But actually, speaking of opportunity, am I seeing one? Oh, okay. Remember, we're always just cosplaying as people who seemingly know what they're doing. We're always cosplaying as good traders. All right, I'm watching this trend line, but more importantly, I need to see the options flow. Let me bring up the options flow over here, and let me also double check one thing over here. Fuck. Am I gonna have to place this trade before I can see? No. Don't break down yet. Don't break down yet. Please don't break down yet. Oh, indecisive. Interesting. Hero, how's the options flow right now? Remember, it's a game of just trying to not do dumb shit. It's a game of trying to not do dumb shit. All right, the die are in the air. So when I say trying to not do dumb shit, it's basically shorting at the low of the day, like just trying to chase it down because you get these random pumps. Basically having the patience to say, okay, I need to wait for some sort of reversion for me to get in because at least I got to fill now at 70 rather than chasing it down here at 50. So saving myself 20 points. And sometimes it just keeps going and going and going. And you're like, gosh, like, why did I do that? That type of a thing. And it's going to happen. So right here, I mean, I have well-defined risk. I have this recent high. Maybe it hits me. Maybe it doesn't. Obviously, I was just playing this trend line breakdown. I saw some weakness and went below the EMA. Unfortunately, it could easily break and this just could be a higher low. You don't know because you don't know the next bar. It's just a question of risk or reward, risk versus reward. And I thought, okay, I saw a little bit of a pump. Seemed like the overall movement was still pretty bearish. I just got hit by this. I didn't realize I put on this trade and then there was a pump in the SPY that is kind of moving against me. And sometimes that shit happens. You don't know what these next trades are going to be. You simply don't. It's just, what is my risk going to be if that does hit? Do I just want to get out now and save well, never mind. It hit me out anyway. So I had well-defined risk. In the world of trading, this is still very manageable. Maybe I should drop it to one contract though. I took a shot. I took this trend line breakdown, wanted it to go. It ended up just being a higher low. And that's how shit goes, dude. If you're in this thinking every single trade is going to make you money, you're not going to survive long because it's going to cause you to hold on to positions longer than you should. And then one of them that doesn't break back in your way, it's going to move enough against you that you blow out your account and then it's game over and you have to like completely restart. So like, that's what it is. I go into it assuming that I have about a 50-50 shot. And then if I could just manage my risk reward versus that, pretty much that's how ideally I'll survive the game. But right here, I saw this pump, saw it coming back over. I was like, okay, we have lower highs. Let's see if it actually pukes. I followed a little bit of the trend line, came down, and just unfortunately, it ended up just making a higher low and we pumped off of it. Really what happened was I saw this break down. I placed the trade right around 48 and then it pumped here anyway. So like, I just kind of got a bit unlucky with something happened in the S&P 500. What was it? Someone came in and really started buying calls right here. There was just a big spike, unfortunately, right after I put on my position. So shit happens, dude. If things like that are going to knock you off your game, trading's not going to be for you then, because that's just going to happen so many times. Look at this. We dropped right to the level I called out, pretty much perfectly to the T. I thought we were coming up here and we're going to retest, but then we got this big spike at 949. So I went short here looking for that retest. Instead, it broke the other way. Shit happens. But this is the importance of doing your homework with options levels. Like, to anyone who was in here in pre-market, I drew so many arrows here. There was 3 arrows on the screen saying this is important, this is important, this is important. And look at the way that we broke. Right there. Like, before the market opened, I said, this is the zone to watch. And it looked like, well, at least as of now, that's the perfect reversion. For all I know, maybe we end up retesting it. I don't know what the market has, but me calling this out, folks, it's not rocket surgery. It's just a basic understanding. Well, I shouldn't say a basic. It's just an understanding of the options market. Once you understand what's going on in open interest and gamma and Vanna and flow, and is it positive gamma, negative gamma, is it call dominated, is it put dominated, where's the DEX transition zone, where's the GEX transition zone, that's where you get to call out these things of, oh, okay, this is a level to watch, and that's exactly where we fucking bounce. Like, literally called this out before the market opened. Gap fill on SPX. I actually don't think we technically got it. Did we? I don't think we did. I think there's the babiest of gaps right there. Look at it. Didn't hit it. It got really, really close, but we actually didn't get the gap fill. Look at right there. We were off by zero point 0.1. Yeah, the low here is 0.94 and the gap fill is at 0.84. So we technically didn't get the gap fill. That's brutal. Brutal, brutal, brutal. All right. How are we looking? Happy that I made the smart play with Tesla, or at least what I would consider the smart play. I'm watching these trend lines on the SPY and the Qs, kind of watching the strength of options. We can see we puked up until about 943. I guess it was inappropriate of me to take that trade where I did. I didn't realize I saw this weakness right here. And I thought, okay, we're double topping on Delta and we're about to puke. And then I just got unlucky with someone buying a bunch of 0DT calls and we pumped up and now we just went flat with it. So I'm watching this trend line. Ooh, how do I want to handle this NVIDIA play? 43%. Let's see. Watching this recent low for sure. Style. Let's see what the market is gonna give us today. Whoa. Something just happened there. All right, I'm dropping my order size to 1 just to give myself a little bit more room to play with. 2.5 instead of 1.25 basically. Just trying to give myself a little bit more room to play with, but we have a clear, ever since 941 and really since things kind of got crazy here at 948. Man, I put in my order right before those options trades hit the market. But anyway, recently we're seeing higher highs and higher lows, but we did start off the complete opposite, lower highs and lower lows. So just kind of that U-shape, inverse shoulder, head, shoulder. We snapped the neckline. We snapped it. We retested. Then we just popped out of nowhere. Remember, we're now just back at this key level of 5,700, huge open interest level. This 10-point region is just a giant battle. So we came down to, this was my bear target number 1. So we opened there, went down to the next bearish zone, and then popped right back up to this 10-point region. There's a lot of open interest at 90, a lot of open interest at 700. If we get above it, then you're looking to hit the closing value from yesterday, the potential red to green move. I'm seeing what's coming across the data right now. Calls are getting less bullish and puts are getting less bearish. So both sides are kind of setting us up for a little bit more of a consolidation. Let's see if it can hold this. Tested one important zone. We're just now at another important zone. Will it keep going? I have no clue. Will it get rejected? I have no clue. I'm just going to wait till one of those things happens, and then I'm going to attempt to play it accordingly. But I do see the SPY showing some strength. Puts are being closed out, and calls are being opened on the S&P 500. A huge chunk of puts were just closed out. On the Mag 7. Who was that for? Tesla, Amazon, Google. What the fuck? A huge chunk were just closed out. All right, 5-minute trying to go bullish, 10-minute about to test, 5-minute bullish, 10-minute testing. The 30-minute and the 4-hour are still bearish on both of these. This is, not only is it the price momentum test of potentially going from bearish to bullish, but we are also at this level. So looking to see how this plays out. Are we actually going to hang out up here, or is this just kind of a little fake out and then we crack right below 90, crack this trend line, and then set up another retest here? Both are viable. Right now, the options flow, you could see it on the screen. From 940 to now, options flow bullish. From 942 to now, the SPY got bullish. So we started off clearly the first 10 to 12 to 15 minutes bearish, but there was a switch right around 943-ish that is causing, look at that, the Mag 7. That's a lot of puts being closed out. A lot of puts. Look at huge amount of volume. Just rip that delta up. Let's see. NVIDIA, Broadcom is still down 2%. Broadcom has been getting beaten up lately. Looks like SPY is going for its closing value from yesterday. We're still technically in the red territory. But is this going to go? We're slowing down. See, the Mag 7 got that big pop, and now it's just that drift to the upside. The SPY, same thing. Big pop. Someone traded a big chunk right here at 954, and it popped, which honestly, like, clearly, did I lock in a loss? Of course I locked in a loss, but I got out here. I'm very, like, if I held it to this point, I would, like, legitimately have blown out these accounts. So that's the importance of just admitting when you're wrong. I saw, like, these highs were being tested. Maybe you could argue, like, oh, should you have gone long here at 954, something like that, because we popped, we pulled back, and it seemed to be waking up. Of course, that would have played out. At that moment in time, yes, the price structure was getting a bit stronger. We made these fresh highs. The momentum was still bearish, so options flow was bullish, price structure was bullish, but the momentum isn't attempting to go to bullish until about now. So, like, if you wanted to be really, really stringent and, like, wait for all three, technically these were still bearish, like, at that point. But if you're a person who maybe doesn't care that much about price momentum, well, okay, like, that ended up being a pretty good trade because you followed structure and options flow. But I do see we're kind of stalling out right here, so I'm not going to be so antsy to make any trade because the next one I need to be pretty confident in to try to eat away a little bit of that first loss. Eat a little bit away. I believe there's pending home sales coming out in about a minute, or no, in about 5 seconds. So pending home sales report is going to be dropping literally at 10 a.m. So that's not the biggest report, but let's just see if it has any impact. Initial reaction, slightly bullish and pushing us up to this potential red-green move. Pushing us up to this potential red-green move. How is the options flow looking? Pretty fucking strong, actually. Pretty strong. Right. Cool. Did that. Just moving some shit around. Let me switch this up. How is this account? Oh, why is it locked? Why is it locked? Right. Okay. Did all that. I'm just updating the Discord. Okay. Wow. Mag 7. That's some legit strength right there. Are we fighting back? At this point, we honestly might just be fighting back into this transition zone. Remember, this is still the bears in control, but I could see this magnet kind of up to the transition zone, and then from there it could get a bit more bullish. But let's see. I mean, this is a pretty strong push. I mean, clear vomit for the first 13-ish minutes. We hit that at very important support. And not only did we rip to 5,700, I'm surprised it didn't battle out more there. But regardless, we got this follow through. Let's see. Yeah, I'm just seeing potential bullish move. I mean, obviously, if there's a trend reversal, it first starts on the 5 minute, then the 10, then the 30. So I want to see how this really shapes up. I'm wondering if this is going to hold, because there's still a real shot we get smacked right here. So I'm just kind of waiting. Waiting. Tesla, nice higher highs, higher lows. Nvidia, like the overall market, smacked. Now higher highs, higher lows. We're just at this red-green move. The SPY's technically in the green, while SPX is just slightly in the red. Remember, sometimes there's a slight baby difference between the two, and that's just because SPX is the theoretical index, while on the other side, you have SPY, which is the ETF, so it actually has the underlyings in it, like the thing that makes it up. So sometimes there's time delays between the buying and selling. Sometimes there's transaction costs that have to be accounted accounted for. And that's why you see slight differences between SPY and SPX. But it's still like correlated 99.9999. Like it's super, super high correlation, but that explains why SPX can be slightly red while just a second ago SPY was slightly green. That's exactly why. So let's see. I mean, obviously bears in control at first, then the bulls fought back a lot. Is this the terminal point for the bulls, or do they have more left in the tank to bring us all the way back up to the next target zone? Which if that happens, I mean, this could be a nice move. That could be a nice profitable trade, but kind of watching this up here if it holds. So obviously watching these trend lines to see what in the world's going on. The 5 minute is bullish, but it might be telling if we get smacked back in here. The 10 minutes attempting to break out, but it's really testing. So kind of watching this. Obviously, if it comes back below 48 here, that could be a bit problematic because the 30 minutes still bearish. The 4 hour. Oh, brother. Oh, brother. Oh, brother. Oh, brother. So watching this trend line, I'm watching 568 on SPY, and then obviously watching these recent lows here on the Qs at 483.25-ish, and then also this trend line. Tesla strong, Broadcom uniquely weak, NVIDIA had a good pump. Now it's just kind of going flat, indecisive. MicroStrategy is slightly green, so is Tesla. Palantir, everything kind of got hit and then is attempting to rally, but let's just see. I think even the market's indecisive right now. From 956 to this exact moment, we just haven't moved much. Just haven't moved much. Waiting to see what. I would say this is indecisive because the shortest time frame is bullish while the backdrop is bearish. But then on top of it, I see a pretty freaking bullish options flow on a 0 DTE basis. 940 ripping, SPY. Yeah, we just got that big pump. Granted, things are stalling out not only in price but in options. So let's just see. We have our bull case. We have our bear case. We'll play it accordingly. Man, I just wish we had a little bit of that puke. Right here, I said, okay, don't chase it. I saw this. I wanted it to fall back over, but obviously that did not happen. I guess the options flow was a bit too strong. Got unlucky that 30 seconds later, someone just absolutely smashed it. Meta's picking up now. Kind of watching this actually potential on the short. I'm on the 500 tick, but a little bit of a bull flag going on here. I'm curious which way this is going to break. Oh, the 5 minutes bullish, the 10 minutes testing. The 5 minutes bullish, the 10 minutes testing. So we're just waiting for this test. Who wins this test? Is the 10 minute, like we're running into 20,100, which could be problematic. But right here, that's still bearish. What's the 5 minute going to do? Right here, it's so indecisive right at this key level. Right, this trend line's testing. We got this big pump. Which way do we break? Do we break up or do we break down? Which way do we break today? Which way is the options flow? Which way is the options flow? Options flow is long and strong. Well, it was long and strong, but now it's kind of flat, but it's definitely not dipping. I guess we're just waiting for someone size. Another little trend line test there, right below SPX's closing value. 5 minute, 10 minutes still there. 5 minute, 10 minute. I don't think there's anything that could be done right now. Not yet, at least. Are the Qs going to get, are they breaking down here? Well-defined risk at the intraday high. Could be a trend line breakdown. You'd be watching this right here as well. You could be seeing something like the SPY. 60, 40, 800. That would be an $800 risk if I took this one. Oh, are the options turning though? They're starting to a little bit, but it also could just be a fake out. Here's what I'm seeing when I say that they're turning a little bit. You have to go to the 5 second. You can see right here, the SPY sold a bit. You have the Mag 7, it's sold a bit, but overall the trend is still clearly up. But there was potential. Is it still selling? Do I want to take this trade? All right. Risk at the intraday high. Target doesn't really matter. We're going to see if this is an actual price breakdown or if it's just like a classic little flush. Honestly, I could probably bring my risk even closer. Yeah, I want to de-risk as much as I possibly can, as quickly as I possibly can. So seeing a potential little reversal here on the snap of 75. Then I saw this low here at 52. I got in with a fill slightly below it. The fact that we cracked it, it's going to play out of one or two ways. Either you're going to look like a genius because you snap the low and it capitulates, or you're going to seem stupid because it overshoots it and then we bounce it back. To try to make myself feel less stupid, I do try to align those trades with it. And I just now, starting at 10:07, a little bit of a change, like it's actually picking up right now. I see options coming down a little bit, wondering if that's the start of a new trend. Here, because right here you can see it in the SPY as well. We pumped and then 10:06, 10:07 is right where options pulled back. But is this just going to be a higher low? That's like kind of what's going through my head is this just like the little fake out higher low scenario? Because we have the Qs perfectly touching the trend line right after the SPY broke down below its trend line. So I'll give it a second. Like you could see, I was already pretty aggressive with the stop just because it's not necessarily my favorite trade, just because we've already had quite a bit of whipsaw. But I also recognize we ran into resistance. Like this is resistance on SPX. It's the closing value from yesterday, but now we're back to another key level, 5,700. Actually, this whole 10-point zone is going to be pretty important. So I'll take a stab at it. I'll see how it plays out. Obviously, I did downsize. Recently, I've been trading with 2 contracts. I'm now on 1 contract just because like I'm not thinking that this is necessarily an A+ setup. Because there's a couple things to consider. Yes, options flow is strong, but it's kind of weakening right here. Is the 5-minute breaking out or is it getting smacked? Did the 10-minute actually get rejected? So it's a low risk trade, but it's not something that I'm like super gung-ho about, which is why I only traded 1 contract. And honestly, if we can crack 20,000, honestly, even if we crack this trend line, I'll probably move my stop to break even just because like why risk money? So this is the situation that I'm looking at. So if we can crack this trend line, which can I make just strong a bit better? So watching 20,000 flat, just an important level to pay attention to. And I'm also watching this. We don't really need this. Kind of watching that. And we're going to see. This is, remember, wherever we go is based on people who are about to trade. I don't know if the people coming into the market right now are bullish or bearish. That's what decides. Remember, when you put on a trade, I don't think people really conceptualize this. Okay, you throw on a trade, whether you're bullish or bearish, whatever, you're live in a trade. Whether it goes in your favor or not is dependent on people who are going to be trading after you. So it's kind of a prediction for those people. Are they about to agree with you or are they about to do kind of what just happened here and completely rip it against you? Like whether it moves for you or it doesn't is based on other people either hitting the buy button or the sell button. And I'm kind of watching this, wondering if that's just enough of a pump, or of course we could rally off of this and it could be a higher low. Just kind of watching this 5,700 level, massively important. Actually, this whole zone is, but this is just a key psychological level. Potential trend line breakdown. All right. So I'm either looking for the SPY to snap 566.46, this low at 953. Same thing with the Qs, the low at 953, or basically to revert above this 568.34 and it push, and then we have a shot about going to the overall transition zone. The reason I didn't chase any of this higher at any point, even though clearly it would have made a good chunk of money, is because, where was that? Where was it? We didn't break this, and I knew that was resistance. Didn't really feel the smartest to be playing off of that, and we're still kind of below this transition zone, so just changed how aggressive I either wanted or didn't want to be. All right, watching this new trend line. Are we just pumping right out of it? Should I just cut this? Well, we're just actually right back up. Very, very... Dude, do I just want to rip this one? How strong are options? All right, I need to double check options because options... This was a key aspect of why I got into it. Options started to dip. Look at that. They dipped, based, just popped. Dipped, based, trying to make a decision kind of. SPY's right back at the red-green move. SPY's back at the red-green move. All right, don't quite need this. We're breaking out too. I just want to cut this early, save myself about $200. Yeah. All right. Cut it early, save myself $200. We just didn't get the breakdown. All right. My risk is at recent low. I'm just going to arbitrarily throw this up here. Not that this, once again, generally it's just trend following. Hoping that this breakout is real. I've been already chopped up now twice today. Fake out breakdown early, a fake out breakdown now, just here at this point. So we're gonna hope that this one isn't a fake out. We're gonna find out though soon. We don't have the most. I have 1.5K to work with. 1.5K, 75 points. So I have 75 points of potential downside, which is basically this. Yeah, so these accounts are going to be gone if this risk is hit. So basically, very much hoping that this trend line breakout is a real one and not just a fake out. And what am I seeing across the market? The Mag 7 is picking up. The SPY is also picking up. Is it going to follow through? So NVIDIA looks kind of constructive at its own trend line. Tesla is up 2.9%. Let's look at the flow of some of these. So Tesla long and strong. People are buying calls, selling their puts. Meta also strong. Microsoft not doing anything. Apple not really doing anything. Amazon got a huge pump at 954. Google, huge pump. Palantir, bullish. MSTR, not as strong as you would think. Coin, not really doing anything. Broadcom, not really doing anything. GameStop, actually getting sold pretty hard. What else do we have? I'm trying to think of the most popular ones that you guys like to track. DJT, kind of bullish. Rum. Well, just converted back to the SPY for some reason. SPY just hit a new delta high. Mag 7 also looking kind of constructive. Okay, so what did I do that was, dude, are we really going to just get smacked at that trend line again? How many fake outs am I going to get caught up in today? Shit happens. Shit happens. No way is that just going to be another fake out breakout leading to a double top. This is what happens when you play aggressive at first. It's easier for you to blow out, but then if you're right, you grow your buffer more rapidly. And I'm kind of choosing to I'm choosing to take on that. So the chance of the success is lower, but if you get that lucky break, you're going to get the buffer much, much faster. But I am just getting whipped to all heck right now. And I would say that this last trade, I mean, it's still legit. It's higher highs, it's higher lows. You took the breakout. The breakout is just not going the way that I wanted to as of now. I'm still kind of a bit hopeful that we bounce off this trend line or something. Kind of watching this recent high, kind of watching this recent low on both the SPY and on the Qs because clearly we have higher highs, we have higher lows. Watching this trend line. Hopefully just the sentiment is continuing. Actually, speaking of sentiment, there is one thing I can check. Are we going to be bouncing? Are we really going to be holding this 5,700? Kind of watching this trend line breakout. Even the SPY's at it. SPX trying to go is this a worthwhile trade to take? Like if we break this, I mean, that's a nice 28-point move. Play the 50s. Is it worth it? Yes, no, maybe so. Yes, no, maybe so. Yes, no, maybe so. All right. When in doubt, turn it over to you guys. Do you think the S&P 500 is going to continue with this recent higher high, higher low, break this resistance at yesterday's close, and then push up to this transition zone, the GEX-DEX transition zone, the gamma/delta transition zones? That's what I mean when I say GEX or DEX. That's a nice 28-point move to the start of the zone and the top of the zone, which is this interesting call credit spread, it appears, right here. It's about 10,000 shares. Contracts, at 5,740 spread by 45, and then there's this other player now in at 60. So I'm looking at this gamma zone right up here. It's currently calling it out as 35. Right here. Yeah, 5,735 is this positive gamma node. So we could get sucked into that like a magnet. Is this breakout worth it? Is the breakout worth it? Orders, options. All right, we're ripping something. We're ripping something, folks. We're ripping something. How fast can I be? We're ripping something. Oh, brother. Oh, brother, oh, brother, oh, brother. Oh, brother. All right, let me take a quick screenshot. Not necessarily in love with this. Try to break out. Just got smacked. Let's go back to the hero. What are we seeing in the options flow? Looks like we have a little bit of profit taking going on that break right there. So we've been having a decent chunk of puts being closed out this entire time. Right now, you can see that calls are being sold. Right here in real time, what is this current drop from that we just saw on this minute? You could see it. People with calls are locking in their profits. As soon as we got that break, they let it go for a second, and then right there, they're basically hitting the cash register. No one's really touching puts. It's not like people are getting bearish right there. What we can see is just people who had calls are saying, cool, that's enough. The Mag 7 Delta pretty much holding. S&P 500 took a bit of a hit there. But once again, this is people just, I guess they played it up to that level. They wanted to play it up to the closing value, and they said, cool, thank you, thank you, thank you. Basically playing it this whole region. They bought it at the key open interest level, ran it up onto the next one, a little bit of an undershoot. They rode it through this, and then on the pop and the actual break, they said, cool, that's good enough for us. And you actually see in real time more calls being closed out. So it's not really bear stepping in. Of course, there's some bear stepping in right there. That's just a smart play. But really what you're seeing is we're dropping because people are dumping their calls. So if call buying comes back, I would expect it to return. But let's see. Could just be brutal fake outs in every single direction. Even that, like I got back in the green and now we're back to this. Dude, what a fucking whip day. How many times are we getting these fake outs, man? This is just not my day for short-term trading. Made a good chunk of change playing options, but I think the longer your time frame, as in if you go from the minute to the 5 minute to the 10 to the 30 to the 4 hour to the daily to the weekly, whenever you increase your time frame, trading becomes easier. So the shortest time period, if you're like, I'm just scalping on like a 500 tick chart, this, that, the other thing, it just becomes incredibly difficult. Incredibly difficult. Is this actually... I feel like the one time I try to hold it through, I'm like, no, it's going to be a fake out. It's going to be the time that's actually like the legit trend. Oh, this is frustrating. We've effectively, quadruple topped, quintuple topped, hextuple topped right here at 20,090. Just smack, smack, try to break out. Nope. Smack, smack, smack. Sold off. Ran all the way back up, smacked, put in a higher low, try to break out again. Nope. Smacked, and then rejected all the way down here. Like, come on. What a whippy bullshit type of a day. But sometimes that's going to be it. Sometimes that is how the cookie crumbles. I just want to make sure I got this right. Let me switch this. Where is it? I forgot to upload this. Okay, is it another just little fake out bullshit thing, or are we going to get this pump? Potentially another higher low. Let's see if we could take out the intraday high. Like I say, I'm actually like currently interested in now this. Can we get all the way up there? I mean, even on this red to green move from 12 up to 30, that's a nice 28 point move on an ES contract. That's almost $1,500 on SPY. That's going to be almost $3. So you could choose to play it really however you want. You could be selling puts. You can be doing whatever the hell you want to do, really. Which way is this going to go? Nvidia is pretty much flat. Tesla is now pretty much flat. The trend of the day kind of stopped at 956. We had a downtrend and an uptrend, and ever since the turn of the hour, not a whole heck of a lot has happened, team. We're awkwardly waiting, and in that awkward waiting, I happen to be just chopping up my futures account and just getting my dick kicked in. So that's not fun. All right, we don't even really need this anymore. Looking for the Qs. Well, that is another higher low. The SPY's also trying to put in another higher low. I don't know. The bulls, I think, in the shortest time frame, now have gained control. But I wouldn't say in the medium time frame they're in control until they break this transition zone. But for, once again, the future traders, the day traders, the scalp traders, that type of shit, we are... What's the high on the SPY? 569.26. You're looking for the breakout of that, or the breakdown below 567.53. On the Qs, you're looking for 484.09, or the breakdown below 482.41. Here's the current real-time look at the flow. The Mag 7 was pretty freaking bullish up until 10:07. Since then, flat. Looking at the S&P 500, pretty much bullish until this exact moment. Everything got kicked off right around 940, 943 type of a deal. Here, I'll set an alert for intraday breakout or a potential reversal. The Qs are still in the red, but if they get the intraday breakout, they'll be very close to going green, but there might be some resistance there. Nvidia not really doing much, Tesla not doing much, but Tesla is the biggest gainer on my watch list. What's interesting on this is even though the SPY is now green, VIX is up a little bit. Let's see. Watching this, we're coming right back to this. Right back. Chop. We got a nice pump at 10, and since then, just fuck all. Just fuck all. Which way of this range are we going to break? Which way? Which way? Which way? Which way? Which way? Which way? Let me take a quick screenshot, and then here I'll show you guys this. Looking, the bulls are fighting today. They got that perfect little bounce off that level. Man, I'd seem like a goddamn genius if I bought there. Basically, the market not allowing for a breakdown at all. Not allowing for a breakdown. Where the hell is the Discord? Where are we at? I'm just getting goosed. Just have to have patience. I'm long on this right here from the NQ contract. I'm pretty much hoping I'm right, because if it does hit my risks, these accounts are gonna be, they're not going to be done, but they're going to be so fucking close to being done that I might as well just restart anyway. But that's the risk I take on trading bigger at the start. I'm trading bigger at the start to just see if I can catch a lucky like 2 to 3 to 5 day trade session or a streak where I could just quickly get it. My goal is to build up the buffer as quickly as I can, which makes your odds of success lower. But if you hit it, then it makes the overall situation easier. So taking on short-term risk for a better buffer in the long term. And you could see not working out my favor on this particular day. So I'm just trying to chip away at this loss. I currently have 2 losing trades locked in, about a full buffer loss of 2.5. And I'm just wondering if I could catch a fucking miracle at this point. An absolute miracle. Tesla popping. All right, new intraday high. I'll just move the alert down to a potential reversal. SPY in the green. Qs are now in the green. Like I said, the transition zone is here, but if you're looking for a very specific number to target, if you're a 0 DTE trader, I would say please pay attention to this giant gamma zone at 5735. So not only is that the giant gamma zone, you could see all this positioning here with calls and puts. It looks like there's a credit spread between 40 and 45. So that's some resistance right above. There are some long calls up to 5760, but then there's also puts being played here, sold puts, long puts. This is just creating a giant, like this is a magnet. When you see that much positive gamma, obviously the red is negative gamma, you easily move through negative gamma. You have a tough time moving through positive gamma. It is not bullish. It is not bearish. It's just, this is sticky price action. And this is more so like slippery price action, going with the metaphor. But if you're looking like, if you're like, hey man, like I'm just in this for a quick trade, like what should my target be on the 0 DTE? I would say pay close attention to how the market reacts to 5735, because at that point, the market makers are going to start to be more mean reverting. So when you get up there, it acts as a magnet. If you get up, they sell. If it sells, they buy it back. Like this will have definitely some magnetic-esque forces. It also happens to be spot gamma's implied one-day move high from their vol calculations. It's also a hedge wall. So there's basically, my argument here is that 5735 just has a lot going on. The way that 5670 had a lot going on. So there's a lot going on here. There's actually quite a bit going on in this zone. We easily ripped through that. And now the next zone that has quite a bit going on is 5735. But overall, this is a transitional zone. If we're below it, in the bigger picture, the bears are in control. Obviously, they're losing their control. This is the transition. And if there's a break and a push, this is where the bulls start to gain control. And there is a decent amount of action at 5760. And there's also yesterday's high at 5783. So just kind of, those are the major levels I'm watching as now. We did get a little bit of a breakout here. Let me delete that box because I think it might be confusing. We didn't technically get the downside gap fill, which I think is absolutely hilarious. We got so absurdly close and we just did not get that fill. The SPY's trying to break out, had a nice, 6-minute pump, giving some of it back right now. Where am I at? Dude, why can't I just not get a bit more of a push up to like 40 or 50 just so I can move my stop to break even? Because right now, obviously, I'm still taking on risk, which I'm not the biggest fan of based on the current state of whippy ass price action and me being on the wrong side of it, which the first trade I legitimately like. The second trade was stupid. Like if we were to self-criticize, this was a legitimately good trade in my opinion. I would probably take it 9 out of 10 times. It wasn't an A+ setup, but it was an A+, or it was an A setup. I really like it, and we had a little bit more to go. We had potentially dead cat bounce. I think the risk reward was there, and it just happened to hit my risk, and that was around 9:48. I just got unlucky that literally 30 seconds after that, a huge amount of call buying came in. That's just an unfortunate break. I would take that trade 9 out of 10 times. This trade was fucking stupid. at 10:08, I was trying to say, oh, okay, maybe it's over. Maybe we're running into resistance. And at that point, why I'm saying it's stupid, you could say, well, hang on, it was minimal risk because you could risk the intraday high. The EMA was falling over. Okay, yeah, that's all right. But options flow didn't agree. If you look at the options flow at 10:08, just to tell you like where I went wrong, and hopefully someone can learn from this because it cost me money. Here is 10:08. Right where my cursor is 10:08. Without knowing this future data, it still is pretty bullish. Like, yeah, there's 2 minutes of a pullback, but overall it's bullish. So why was I taking a short position right here? Once again, 10:08. Overall, it's bullish. Why am I using a little bit of reversion? To me, that's trying to force a trade that's not really there. So, like I said, just to literally in real time break down this trade, I would have taken my first trade 9 out of 10 times. It was an A setup, not an A plus, but regardless, I liked it. I waited for the pump. It started to fail. I went short at the breakdown. I wasn't chasing. Like, I liked that trade. It was a good loss, and I just so happened to screw myself over because I was trading 2 contracts and it just didn't break my way. But that's the trade-off for being aggressive, because if it did go my way, I would have made even more money. So it cuts both ways. So I liked that trade at 9:48. In retrospect, in real time at 10:09, this was a poor decision. I should not have done that. It ended up being a fake out breakdown. We just bounced off the trend line, going short before it just wasn't a quality decision. This breakout trade, I do like this now, not just because I'm green and for a bit there I was red, but just literally trying to take this breakout, put in a higher low. The only thing right now in terms of management is I need to get myself. Should I just do it? Should I just move my stop to break even? Oh, I can't really risk any money. I'm trying to what is the right move? What is the right move to do right now? I think I have to. It's going to suck because this really does increase the chances of me getting wicked out because we're just not that far away. But I just can't take the chance of losing more money. So my stop is now at break even. So I'm not going to lose money, but like I said, because we're so close to the current price action, it does increase my chances of getting wicked out. So, I guess that's the risk reward, and I should be a bit more conservative because I did take that one trade was legitimately a bad trade, so I shouldn't have been in that anyway. And I don't want to be throwing good money after bad money, and I already held this through a decent amount of drawdown, so I think the smart move is doing exactly what I just did. Like for me, I wish I waited to this point for this just to be my first trade of the day, and then I would be more so risking this low at 10:23. But based on the actions I've already had throughout the day, I haven't been trading in a manner that's saying, oh, okay, like take on a little bit more risk because you're on the good side of things. No, I'm considering the fact that I have a 2.5K loss. And even if I could cut this in half, by a third, even a fourth, like any amount of money is good to like dig myself out of the hole. So right here, this is just ensuring, we actually had this conversation in Discord yesterday. Folks, when you're in a hole, stop digging. Just stop digging. So this is my real-time representation of attempting to stop digging in the hole. I got myself in a hole, moving my stop to break even. It is the literal definition of just stop digging deeper. Just stop digging deeper. So maybe I'll get lucky. Maybe the market gods, maybe the people who are about to trade are going to push it all the way up and I can eat away at this and start backfilling the hole, but we're going to see. I'm going to do some sanity checks just to make sure that I'm on the right. Okay, Mag 7 is still strong. SPY is still strong. Okay, I like that. Maybe the 30 second, you could see it a bit better. Actually, the SPY is kind of, the 5 minutes now bullish, the 10 minutes bullish. Now the 30 minute is testing. 5 minute bullish, 10 minute bullish, 30 minute about to be testing. So I'm watching this 50 EMA on the NQ contract and on the ES. ES is about to flip. The 4 hour seemingly saving itself. You know what might be a really interesting breakout is right here at 72. 72.75 because we puked yesterday and then we went flat for so long. A recovery of that could be interesting, especially because, well, we're kind of getting there now and it's roughly in this transition zone. Oh, fuck. Piper fired. I forgot to put that in. What is today? The 27th. Oh, this is an interesting signal too. Okay. If you are in the Discord, Piper just fired about 3 minutes ago. So I just put it in. Okay. And we are off to the races. I don't even know why I just did that. I cut my loss roughly in half, unrealized. What should I do? If I got out right now, half my loss, but I guess I could keep riding the trend. I guess I should just be more aggressively, because once again, we're coming back to this two standard deviation movement. That's this golden line on the screen. When you push it, it's a good trend following thing, but it is the math behind it says when you break back into it, like if you're riding on the top side of the two standard deviation move, when you break back into it, that's commonly a sign that you're going to take a bit of a breather, and it's actually a pretty good exit. So I'm going to be watching that as closely as I can, just because my goal, once again on the day, I would love to go green, but it doesn't look like that's necessarily in the cards for me today. What's in the cards is trying to just be smart and claw back that loss that I had from the second trade. The first trade was, I still stand by it. I like that trade. I would take it 9 out of 10 times. It just didn't break my way. The second trade was stupid. So now I'm trying to trade to basically get that stupid fucking loss back. But can we just please, I'm going to give it a second to breathe, but I need to be a bit more careful with this. I need to be a bit more careful. I can't, we're on top side of VWAP. Okay, that's reasonable. Please just get right back up. These little pushes, and then it gets flushed. Not so good. Not so good. Matt, it should fill the value areas now. My guess is, I don't know what you mean for fill a value area. I've never heard of that before. Never heard of it before. Might be good, might be complete dog shit. I've never heard of this concept of a value area. Price is price. What's a value area? But I mean, in terms of areas, you have, that's, I guess in my mind, the areas to pay attention to are where the big option players are, because that's where the big money is. I don't know. I don't know what a value area is. It kind of sounds like a fancy way to say support and resistance. Kind of sounds like a pretty fancy way to say support and resistance. Obviously, the last 15 minutes have been pretty bullish. Just on this 3-minute, Tesla's going, Nvidia's going. Tesla's going, Nvidia's going. All right. And this is, like I said, I mean, I called this zone out. I said on the break, and that's actually where roughly I was long on NQ, but we got a little bit of a pullback. Luckily, we did recapture. This is the big transition zone. Bears are in control here. They're losing control. This is the transition zone. A breakout above it is legitimately bullish in more of the medium time frame, but just be careful because there's a specialty call out here at 5735. Let me check just to make sure that that hasn't changed. And in fact, it has not. 5735. 5735. That's a huge gamma zone. So I'm just going to be very closely paying attention, because if it seems as if we're getting rejected there, I'll probably just take my money. Of course, I want it to keep going, because if that keeps going, that means NQ is going to keep going. And even this, I kind of took on a risk of letting it flush back in one time. So I might need to move my risk up to here, which is about 45 points. So a 45 point, I mean, that's about $1,000. I mean, it's $900. So 900 off this. So that would mean if I do move my stop up there, that means the worst case scenario is about 1,600 loss on the day, which is actually what I lost on that first trade. So it'd be kind of getting back to where I was on that first one. I can't believe I took that second one. The second one was truly a weak play. It really, really was. It was a weak play. I'm getting, what was the breakout alerts? The Qs made a fresh high. The SPY made a fresh high, but we're not getting the most follow through right now. How does the daily chart look on Tesla? How's old Tesla's daily chart looking? Oh, Tesla's fighting back with vengeance right now. A little fake out yesterday. Remember, there's a lot of action at 300. A lot of action at 300. A lot of action. A little fake out yesterday. Those cheeky motherfuckers. Cheeky, cheeky, cheeky. All right, let's see. Let's see what can be done here. Looking to see if Tesla can take out the high from 2 days ago. We're pretty close, 288.20. 288.20. Those, hang on, we'll do those cheeky little fuckers. All right, this alert is kind of useless right now. Oh. Okay, here's a quick look at the options flow. Some people are asking. Here's a look at the SPY on the 30-second. Clearly long and strong. We have calls buying and puts being sold. This is enough work right now being done on the option structure to kind of undo what we saw at the start of the day. At the start of the day, we knew we were put dominated below the transition zone. The fact that puts are being closed out and the calls are being open, it's doing work on the option structure. And then from a price perspective, we're getting right up into the transition zone, which is exactly that. It's the transition zone. So let's pay attention to both of those things. Looking at the Mag 7, you have a bunch of puts being closed out, a bunch of calls being opened. Looking at Tesla right now, a bunch of calls being open and a medium amount of puts being closed out. Looking at Meta, puts being closed, calls being opened. Apple, chunk of calls being open, but no one has really traded it since. Microsoft, nothing really happening. MSTR, you had puts being closed out, then bought, then closed out again, and calls are being opened now on MSTR. How does that actually look? Is that a constructive setup? It's an inside day. And there's big resistance at 340. 356, because I'm seeing this shelf right here where it just keeps running into it. MSTR, what is the story with MSTR right now? MSTR is the 8th most traded one. What levels? MSTR kind of interests me. I don't really like it on the daily setup right now, but I do like this. Jumps out to me. A lot of calls being open, puts are being closed out. MSTR, potential range breakout as well, like just roughly, like it pumped, had a range, pumped, came back in, had a range. Like, is it? I mean, your risk is well defined down here at 320. How's Bitcoin looking? We know that those things are going to be heavily correlated. Bitcoin, not looking bullish. It does, if it takes out 89,000, then it is bullish. We see it pulling up, but this could just be a bear flag breakdown, which wouldn't be so good for MSTR. That's it. Like, it could just be a higher low bounce, like kind of a double bottom bounce, bouncing off of 320. Like, does it have enough follow through? Because if it does, we're talking 345, we're talking 350, 355. Like, we have just all this chop in here that it could at least push to the top side of that chop, which is up to 355. And then, of course, if it breaks, you're talking 370. Oh, higher highs, higher lows. You have a bit of a pullback. Interesting. What are Tesla's? Wow. Speaking of strength, Tesla getting fucking rocked yesterday, waking up, fighting with vengeance to take out that high from 2 days ago. See how similar this looks to MSTR? Like, am I taking crazy pills? Pump, double bottom between yesterday and today, and then a follow through. MSTR is just not getting the follow through. Pump, pullback, double bottom, and it's just not getting that push through. If it can break and hold 332, I kind of like MSTR. I kind of like it. All right, I'm going to set up new alerts at the intraday high and then also the potential reversals, but kind of watching Tesla climb. MSTR just got a little bit of a smack at 332 at that potential breakout. Oh, brother. Here's my problem. See how much it's struggling at this 2 standard deviation move. The first time we pumped, we pulled back. It's just really struggling here. Even on this last pump, it undershot it. It's one thing if we can stay above this recent low, whatever this is at 1040, then whatever, you just give it a shot. But that's also a pretty big if, team. Pretty big if. I could just cut right now and I'd be cutting my loss in half. Or I could probably be more reasonable and just move the stop up to that low and it wouldn't be in half, but it would be a good chunk. Like it would be a good 35-ish% reduction in my loss on the day because I'm now in repair mode because of my first trade was unlucky. My second trade was legitimately a bad read. I wanted things to be there that were clearly not there. Now, this could be an interesting thing for people who are maybe looking for an opportunity in a short term. Look for this trend line breakout between the high at 1043 and 1047. Look for that trend line break, but double check it. And this is going to be the important thing. Double check it that options are picking back up because right now we're drifting down a little bit. Just a little bit, nothing crazy, but it definitely is a bit of a drift down. SPY's taking more of a drift down right here. So looking not only for this trend line break, but also for that break to be aligned with a continuation to the upside in this delta reading. That would actually be a pretty solid trade. If I had more buffer, I would actually consider adding another contract there. If I had more buffer. Oh, should I take it anyway? Should I go for it? 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 SPY's picking up a tiny bit. The Mag 7 is flat, but price is picking up. 5 minute, 10 minute, 30 minute are now bullish. Well, this one closes in 9 minutes. 5 minute, 10 minute, 30 minutes testing here. So you're basically saying, yes, it is going to break out. Interesting on the 4 hour as well of like, we're at the top side of this shelf. Like, is it going to follow through? Kind of looking like MicroStrategy in a way. The 4 hour on ES did push, but got slightly smacked in. It's saying, are we actually going to do this? Are we actually going to do this thing? Fuck. Uh-oh. I don't like that. I don't like the fact that it took out this low right here. Ooh, do I just want to take this off now and say, hey, there's always tomorrow. There's always tomorrow. Come on, just make my life easy. Pump right back up. Don't make me sweat this one out. Don't make me sweat this one out. Make my life easy. Market's already been making my life tough today. Let's not make it even more. Oh, something just happened with Moody's, which... Moody's higher tariffs and tax cuts to boost deficits. Moody's edges closer to a U.S. downgrade. This just came out 16 seconds ago, which might have had a little bit to do with this, but we already knew that Moody's was being a negative Nancy. We already knew that Moody's was being a negative Nancy. Okay. Let's try to do smart shit today. Remember, I'm trying to cosplay as a good trader. So ever since 943, we pumped, a little bit of a pullback, higher low, pumped again, a little bit of a pullback, higher low. We pumped again. Guess what? A little bit of pullback and a higher low. Will we pump again for the whatever 1, 2, 3, fourth time of the day? Is that in the cards? Is that in the cards? Is that Tesla's going? Tesla's taking out the high from Monday. That is strength. All right. I'm also going to set an alert on MSTR to take out 332.67. I find that interesting. Here's a look at the options flow. Mag 7, SPY, trying to pick back up. The Mag 7 is actually recently now been looking stronger. Look at that. The Mag 7 just pumped to a new intraday high, while the SPY it pumped a little bit, but more so going flat right at 25. Let's go to the 3-minute. We might be able to see more. Look at that, getting rejected right at the start of the transition zone. That is no surprise. Oh, I wonder if I should have taken another contract there. Yeah, my average would have gone up, but I could have moved my stop still to be break even. And then if I do get lucky, that would be such a fast way. Oh, I wonder if I should have taken that at 62. Because then my average fill would have been roughly here, and I could have moved my stop there anyway. So granted, if it went back, I wouldn't have been chiseling away any of this, but 61, I'd already be up another 20 points, so that'd be another 400 off, so I'd almost be at break even right now. That's frustrating. I wonder if I should have done that. Oh, well, regardless, I should now move my stop all the way up here. So now I'm in at 91. My stop's basically at 30. So that's about 40 points. So about $750. I'll at minimum be able to knock off of this loss. And obviously, if it keeps trending, I'll ideally just get out and maybe even with a little bit of green. But we're doing some work. This pump it's favoring us for a little bit. Still right at the, like I said, we are in the bearish territory. This is the transition zone. All right, I'm going to get rid of 90 for here just to clean this up a little bit. I'm going to clean that up. So we know that this is an open interest downside gap fill. We know that's yesterday's low. We know this is a key level. We know that's the close. This is now the transition zone. Oh, I should probably check to see what's going on above because you guys might be interested in that if we actually get going today. All right, let me reload this just to give you the current open interest levels. Right here, we're at a big battle, 5,730. I'm not joking when I say this is the transition zone. If we can break 45.50, yep, there's a shot of 70. Oh, that's interesting. Looks like things have shifted throughout the day. That is 70. That's 800. 50, 60, 70. Okay, I'm going to be moving this up to 70. So upon a break and a hold of 50, my next target would be 70. Then you have yesterday's high at 5,783, and then you have a key open interest level at 5,800. Let me see what else is going on. These are all sold calls. So a lot of net selling. So we're going to be running into a bit of a mess, as in that just price is going to get sticky, which is also perfectly shown here by this giant purple node. We are getting right up into sticky price. Now, if we break and go, that's what sets up an interesting move to 5,770. But I don't want to make it seem like that is an easy thing, because first you have to take out this massive positive gamma, and you can see we already went to it once. We're at it a second time, kind of getting a little bit faded right now. So, it's attempting. All right, resetting up these alerts, but we are definitely right at a key mean reverting situation. A key mean reverting situation. Oh, I'm still fascinated by what the fuck is happening with MSTR. How is this position looking? Yeah, had I taken that, I would have been able to dump one at I would have been able to obviously lock in 60. I could have locked in an extra 25 points, which would have shaved a nice $500 off of this. Oh, coulda, woulda, shoulda. I guess you can't cry over that. Can't cry over that. Coulda, woulda, shoulda. At least I'm better off than before when I first took that risk. And I did move my stop up more aggressively. Let's just hope that there's not a flush down where I get fucked. I guess it's going to be what it's going to be today. Just trying to keep the train on the track. I did want to check out some of where's the equity hub? Let's go to MSTR. Okay, MSTR, high volatility point at 385, low vol right here, 340, so it might have a tough time breaking that. The put and the calls, last close, low volatility point, low vol. Interesting. 350. People are targeting 350 and 330. 330 to 350. What about the vol dashboard? It's actually cheap premium right now. Cheap premium. Interessante. MSTR currently has some cheap premium. And if we do break, we're going to see a spike in it. High vol is all the way up at 385. This is right here. This is 385 if my head is blocking it, but we're pretty much at the low vol point. Like we have a little huge gamma strikes there. Risk reversal, history, not really any movement, but we know it's still being actively traded, right? Yeah, it's the 8th most traded contract right now. Interesting. It does catch my eye. It does. It does catch my eye. 353. What are we at? We're at 330. I shouldn't call it MicroStrategy. I should call it strategy, because that's what it is. It is strategy. SPY, new intraday high, and we're starting to flirt with this zone. Remember that key gamma level is right at 35. I'm honestly a little bit nervous if we're just going to get rejected right at it, especially what time of the day. It's 11 now. Remember, and this isn't an exact science. Like when I'm saying, oh, it's a zone. It's not like the exact number. And it just becomes, as you get closer and closer to it, it becomes more and more influential. But as you could see, we're like pretty much right at it. Like we're right in it now. Yeah, the most extreme is right at 35. Oh, I wonder if we're just going to get pushed up to that and then just stuck there. 35, this is it. That's peak gamma for this particular node. Peak gamma. All right. Let me quickly screenshot that. In all reality, I'm trying to just like forget about my NQ position and hope that it like takes care of itself, which I don't know. Maybe it's smart. Maybe it's not. Maybe it's smart. Maybe it's not. How's it doing actually? Remember, that's not my real price target. I just kind of had it in there because I wanted an order, cancel order. I wanted upside just in case something happens when I'm not paying attention. But mostly I care about my downside, and I just keep wanting to follow this. And I mean, dude, I'm chipping away at this loss. I really am. On the next push, like if we can break 200, which is right where we got rejected, I'd be able to move my stop up even higher, but I need that push to actually happen. So obviously right now I have my stop anchored to this recent low at 1051, and I'm just hoping that the market favors another push to the upside. And at that point, we'd be talking about, I mean, I'm down by 600, so I need 30 points. So my break even is roughly around 210, roughly. Maybe. I don't know. I could figure it out. $2,450. How many points do I actually need? Maybe I should figure out my break-even point. Oh, Can Matt do the smart things? Yeah, my break-even is roughly there. The accounts are off by like a little bit. So it's roughly right there where I'd actually be back to being in the green on the day. So like it was doable. I mean, the issue is we got smacked exactly at 20,200 perfectly. It's not that far away. Like this is in the cards today. It's just more of, do I want a chance at coming down here? Will it come down here first and then bounce? Should I just get out right now? Because if we're turning, it's a lower high. That trend line breakout trade, that obviously worked out pretty nicely. Here's an additional one, just a little bit of a bull flag. Oh, man. Or who knows? Is it just going to come for me, knock me out, and then vomit? I could get my loss down to only 1,000. It just doesn't give me the most buffer to work with. I guess I'm still just being a little bit maybe like too hopeful or something. Because here I am saying, oh, I just need a bit of a push, but that bit of a push, like I need to be mindful of the fact that we have a huge gamma level right there. Right there, 35. I mean, it's screaming at us in all of its glory. Now, on the flip side, if we can break 45.50, we get into a bit of a negative gamma, so things would speed up. We go from sticky price to kind of a slippy price action. You could see there's more negative gamma up there. But that might just be a pipe dream. We first have to get through the bullshit that we're currently in. All right. Things are slowing down. We're grinding to the upside. Feel free to, here, I'll go to this. These are the levels that we spoke about. Feel free to screenshot it. I just want you to know that this is the big transitional zone. Bullish above it in the medium term, bearish below it in the medium term. Obviously, intraday, we have higher highs, we have higher lows. So bullish price structure. And then if you want to see the flow, I mean, you guys have been seeing it, but just to give you a recap before we ditch, obviously bullish, options flow bullish, recently flat, but we are heading into lunch. Mag 7, pretty much bullish. And then if you're looking at price momentum, 5 minute, 10 minute, 30 minute bullish, 5 minute, 10 minute, 30 minute bullish, and the 4 hour on both of these are seemingly trying to save themselves. So that's pretty much the snapshot. The bears did quite a bit of damage yesterday, but now the bulls are doing quite a bit of repair today. So we're kind of in that awkward in between where how's the week going to end? What's going on with inflation tomorrow? What in the world is happening with JPM on Monday? Like what's happening with tariffs? So we're just naturally getting kind of like the pushes to the upside, the pushes to the downside, and it seems like day in and day out, any of these guys could honestly be winning the battle. So what a time to be a degenerate trader. That's what I have for you. A shout out to Rumble. Remember, Rumble Live is the code to get Rumble Premium, $20 off for the year. Shout out to Apex. If you guys want to be trading on accounts the way I am with someone else's money, right now you could get a pretty sick offer from Apex. Use that code Goonie to get 80% off, and it is a one-day pass. And if you want to do that 50-50 strategy, tomorrow is the PCE day. That's a pretty good attempt to try. Is it a guaranteed thing? No, but I mean, it's what I have found them being the most time-efficient way to actually pass those tests. Now, obviously later on, however my current Apex trades go, I will tweet it out later. You guys know I already put my stop in. So my like worst case situation, I think is going to be a loss of 1,700. But I am hopeful for that push and ideally getting slightly into the green. But we're going to see. I'm just hoping to not go on tilt. I am a little bit frustrated at myself for, I guess that second trade, I just keep coming back to it. It was so weak. So I'm going to break it down in my own trading journal a little bit later today. The first trade, the more I think about how today played out, I'm actually more confident in that being a good trade. It just didn't go my way and the bull showed up to fight. So like, I think that was a quality loss and that's going to happen. The second trade, I don't think I really had business being in there. The only smart thing I did with that second trade was I knew it was a little suspect, clearly, at least in my subconscious, because I cut the size down. I was like, okay, cool. Like you're not like, instead of going for 2, it was 1. So like it's clearly somewhere, some aspect of my being knew that that was a trade I probably shouldn't have been involved in. So I guess it just is what it is. So that one was a bad one, which then knocked me on my heels. So now I can only trade one contract on the trade that I really wanted. And that's the one that I'm trying to build back up. But as of right now in real time, I have a locked-in loss of 2,450. The unrealized gain in real time is 1,700. So it looks like if I were to close out right now, my total P&L would be a loss of 700 per account, which is about 14 grand, which is not ideal. But obviously the trade is still live, and I'm just hoping that maybe I could catch a lucky break with the overall market pushing through that positive gamma node and kind of leading us to the upside. But it might be a rough and rocky lunge. So maybe the smart move is literally just to lock it in here, because something like a $700 loss, at least in the futures market, is relatively easy to make back. So maybe just take a good loss on the day. But regardless, I will post a picture and proof of how it plays out. So check that out. That'll be on Twitter later. If you want to join the trading Discord, remember your first month is free when you sign up on Locals. Locals is the account management and payment processor for you to be in the Discord. Check the second pin message, and there's also a giant Discord button. So either of those will get you into it. As soon as you're a supporter, you can become a supporter for free by using that code Goonie. That's what I have for you right now. We'll be posting an update later on today. And then tomorrow is not only an inflation day, so we're going to be streaming early, but it's also going to be Payday Friday, where we're going to be giving away some cash and some prop accounts. So it'll be a good old fun time to conclude the week tomorrow. That's what I have for you. I appreciate all the good vibes. Love you all. Catch you later. Peace.